By now, inflation should be no secret. Earlier this week, we had the US CPI, which is a measure of inflation, come out at over 7%, a number we haven't seen in 40 years. I'm sure you're all feeling it, whether it's the grocery store or it's at the gas pumps. Like I said, it should be no secret at this point. And even when we flip to the investing world, we started to see these companies start talking about inflation in the end of 2021 in their earnings calls, and we can see that that number was up 200% last year in terms of the word inflation being mentioned. Now, what does this all mean? Where is this video going? That is a great question. Today we are going to try and mitigate as much inflation as possible, and the way that we're going to do this is we're going to focus on certain companies. I don't want to give too much away, but we'll be covering where I think you should be looking at least over the next 1 to 3 years, if not longer. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learned something new or you gained some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting the subscribe button and turning that notification bell on for similar content just like this. Nick, where are you going with this video? We are going with companies that can move their prices, companies that have pricing power. So where we're going to start is we're going to take a look at this Economist article here. And it says pricing power is highly prized on Wall Street. It's definitely a focus for a lot of companies to gain that type of brand. We're going to move and we're going to look at one example really quickly just to give you an example of how important it is. So we see here a growing number of companies are raising prices as costs for labor and raw materials rise. This summer, PepsiCo, an American giant, lifted prices for its fizzy drinks and snacks to offset higher commodity and transport costs. It plans to further increase early next year. So that is something that a lot of companies have talked about at the end of last year and are doing so today. They have priced in this inflation into this year. And just to give you an example of the magnitude of what it did to their balance sheet, we go over to this Bloomberg article and we see that 3 months after they raised their prices to offset higher input costs, PepsiCo registered more than $3 billion in operating profits. Coca-Cola, their competitor, they posted a 28% profit margin. Both have said that they will continue to raise prices. This is not just we're at the beginning, this isn't the end. So when we go back and we take a look and we say, okay, that is a great point. You do want companies that can go and kind of set their price in the market. You don't want to be investing in an area where there's a lot of competition and they're driving costs down. You really want to go with market leaders, brands, and that is what this video is really going to be all about. So again, starting at the top, pricing power is the ability to pass costs to customers without harming sales. And it has been long prized by investors. Warren Buffett, we've talked about him many times on this channel, definitely my mentor when it comes to the investing game. Warren says he has described it as the single most important decision in evaluating a business, and it's easy to see why. When you hit an unexpected expense, firms without pricing power are forced to cut costs, boost productivity, or simply absorb the cost through lower profit margins. So those with pricing power can push those costs onto the end consumer, and the end consumer is willing to pay those. So let's go down and take a look at maybe some sectors within the S&P that happen to have more pricing power than their competitors. So we're looking right now at the pricing power score. It's put out by UBS and it looks at the S&P 1500. So the top 1500 companies in America. And what it does is it looks at 4 indicators. It looks at markup, market share, volatility, and the skew of profit margins. And based on that data, you can see on the chart here, it provides a score. So you're looking at consumer staples. We're talking about the PepsiCos, the Coca-Cola. these companies are more able to move their prices and not have it affect what their sales are and what the revenue is. We go down communication services, IT, consumer discretionary, and healthcare, real estate as well. These are ones that can raise prices without harming sales. On the backside of that, the ones that are affected most are industrials, utilities, materials, financials, and energies. And it's crazy because financials and energy have been performing so well over the last 2 quarters. So that is something that I've learned and taken away from this. I know, IT stocks, your FANG names, have taken a little bit of a hit over the past couple months. But, we'll talk a little bit about where an example we've seen even recently where a company has flexed their pricing power muscles. We go on here to see just a little bit more of a confirmation as to what we're talking about, and it's called the price discovery. So what this is on the bottom axis, you're looking at what the US inflation rate is today. This week we came out over 7%, but let's say at 3% inflation, these companies that have the strong pricing power returned over a 12-month period over 9%. If you drop that down, you start to see that over a long period of time of inflation, the companies with stronger pricing power perform better. So we'll move on now, and we'll take a look at some sectors and some ideas. We have another chart here, which again kind of brings out the idea of profit margin, making sure that the customer is willing to pay for that increase, and taking a look at where their pricing power could sit to give you some ideas of what could be a great investment opportunity over the next 12 to 24 months. So we see pharma, biotech being at the top here. We see tobacco, luxury, semiconductors, a bunch of different areas to look at. And what I'll do is I'll suggest, hitting pause on the video, taking a look at some of these sectors, and just think of some names that could fall in there. But what we'll do next is we'll actually break it down and see some of what this article is proclaiming could be a good opportunity for you to invest in. The first one is healthcare services. There is no doubt about this. If you need medication, if you need this in order to survive, in order to live, you're going to pay whatever cost this is. Hopefully you have some type of insurance, but that's a story for another day. These companies do perform well when we are going through inflationary times. The next, semiconductors. A lot of people have referred to this as the new oil. Back in the day, when oil was up, the rest of the market was up. It used to be an indicator of how well the economy is doing. It may be a little dislodged, but we're seeing now the importance of semiconductors. It shut down auto. It shut down phone production. It's killed so many different companies in terms of short run margin and moving product on a short-term basis. Next up, we have the beverage industry. We've talked about Coca-Cola. We've talked about Pepsi. People will consume these products through recessionary times. They'll consume these products through the good times. They've built themselves a great market share. Pepsi, Coke, there's other ones there. Go take a look at that. And the other one here is video games. So obviously Microsoft making a big splash with the Activision news. We have Roblox coming out recently. They're tapping into the metaverse space. These companies will be able to raise their prices to no avail. And then, we touched on it a little bit before. The example that we had discussed is a tech company, an IT company, what they're referred to as a sector that has flexed their muscle recently when it comes to pricing power is Amazon. Amazon has recently come out in their recent earnings and said that they are going to raise the Prime membership from $119 to $139. Now, there was some balking that I saw on the internet, but for me, I'm going to continue to pay this price increase. And some people might say $20 might not be a lot, which is a good point. But in reality, there are 200 million Prime subscribers for Amazon. A 20%, or my apologies, a $20 increase on 200 million people. assuming they all re-sign, is $4 billion. So it's definitely a lot of money when you think about it. And Amazon, everybody's become so accustomed to have these packages delivered to their front door, not having to go out to the store, deal with people, social distance. They get that convenience, and it's worth the $20 increase. They have that ability, they have that brand to go to the market, increase, and you know what? Most of us are going to pay it. So very much, consider this pricing power over when you're investing. You want to focus on companies that can make money, yes, profit, but you want to focus on companies that can move their prices higher and have their consumers follow. Let me know down below if you have any suggestions for me to look at for companies with strong pricing power. I hope you enjoyed the video. If you're still here with me, hit that like button. I hope you all have a great week in the markets. Happy trading.